Hello there, and welcome to my channel. I'm Cody the Coin Raptor, and in today's video, we're going to be talking about the Bitcoin monthly for the month of November. Now, you guys will notice that these usually come out about a week or so after the month is finished, and so some of the data on here is going to look a little bit old compared to what we've seen in December. And so I'm going to go ahead and just comment on those and use what we've seen for the past 2 weeks, or at least the majority of December, to kind of give you guys a little bit better context for how things have played out with how ARK imagined they were going to play out. So I'm going to go ahead and get stuck into it right away here. So the Bitcoin monthly is released every single month. This one is for the month of November. And we're going to start here with the market summary. So what we have here is that there's additional demand for Bitcoin coming from both East and West exchanges. We'll talk about that in a minute. They talk about how incredibly strong the Bitcoin holder base is right now. And then basically at the last half of the video, the last 5 or so or 6 slides, they're going to be talking about the deterioration of the macro economy. All right, so we're going to go ahead and just get right into it here. Now, first, we have the Bitcoin metrics page, as we usually go through here. This is all bullish for the most part, except for the transaction volume. That's actually gone down month over month. It's down almost 9%, and they've signaled that this is a bearish change. Otherwise, the rest of the indicators right here are all bullish, and they've said that for the most part, except for the time-weighted turnover, which we'll talk about in a little bit here, everything is going to be looking basically no change at the moment here with all these metrics. So next we go to the valuation. So no changes for these valuations except for futures basis, which is going to be neutral, downgraded to neutral. And short-term and long-term valuations are mostly the same here with no change. So we go straight into the actual price action. Now, they specifically mention they've been watching the 200 weekly moving average, and they've been watching the on-chain mean as well, or the active investor price is what they call it. And then they're also going through the short-term holder realized price as well. Now, Bitcoin has climbed in November above all of those levels, and each one of those levels could potentially wind up being support in the future if Bitcoin ever comes back down again. Now, we were looking at a Bitcoin price that's well above 40K right now, and I think it would be very difficult to imagine Bitcoin coming all the way down to like a 28,000, for instance. But these would wind up being levels of support that we could look at in case Bitcoin would actually head much lower, black swan event, or something happens, additional Bitcoin regulation was passed, something like that. But they're basically saying that about 28,000 and 32,000, that's where there's going to be a significant band of support there in case Bitcoin ever does go back down to those levels. Now, next, they talk about the East versus West month over month percent cumulative price change. And so what they're saying here is basically that they're looking at the prices from Bitcoin on both the US and the Asian perspectives, and they're noticing that in both of those cases that the Bitcoin price is actually appreciated, and that basically signals that there is a global demand for Bitcoin, which I would definitely agree with. Now, you guys can see here in the chart, you've had periods in which the price has gone up for the U.S. markets and periods in which it's gone up for the Asian markets, and now you're starting to see that basically in both cases that the price has been moving higher. Now, again, this also has to deal with the fact that we have the upcoming halving and potential Bitcoin spot ETF. So I'm not really surprised that it's actually they've been both moving much higher. Next, they go through the percent of supply that has been last active by age. Okay, so this is something I talk about quite a bit in my channel, but the whole idea here is that you're separating the supply into specific age cohorts. So you have the age of 1 year or more, so coins that haven't been moved in a year or more. That's 70% of the market, which is pretty remarkable. If you look at where it's been in in the entirety of Bitcoin's history. That's at the highest level that it's ever been for Bitcoin. And then you also take a look at the 2 years or more, that's hit 60%. Again, that's the highest it's ever been. Now you go to 3 years or more, that's actually not, but it still is fairly high. And then you go to 5 years or more, that is the highest level it's been. Not a big surprise there, considering as Bitcoin ages and goes along, you're probably going to wind up getting a higher and higher percentage as Bitcoin gets older and older. But it's remarkable to point out the fact that you have 1 year or more, 70% of holders have held their Bitcoin for a year or more and not moved it. And this is really important because when we talk about Bitcoin bull runs, you have to have a level of a base, basically, from which the price accumulates. And now these long-term holders, these people that have held their Bitcoin for more than a year, are likely to hold it for even longer than that, a couple of years at least, until the top of the next bull run. Next, you have the time-weighted turnover. And so when they talk about time-weighted turnover, you can think of this kind of like another age-related metric. And they specifically refer to it as the coin days destroyed, so when coins are basically moved. And this level has also hit a low that they haven't seen since about January of 2010. And this is really important as well because now you're starting to see, again, a long-term holder behavior, okay? The power of the long-term holders. They're not selling. They are holding on to their Bitcoin and they're waiting for a major bull run. Now you can see this number does tend to spike in the Bitcoin bull markets, and it does tend to move back down in the bear markets. And now we're starting to see a continuation of that. No doubt that we're going to wind up seeing another spike in the next bull cycle, in the next bull run. But for now, these long-term holders are not selling their Bitcoin. So now we go to the economic indicators, and this is the part of the report which they talk about the economic indicators that affect Bitcoin, starting with the gold to oil ratio. And they're saying here that the price of oil has been moving down and the price of gold has been moving up. And so that's kind of seen as an indicator of a potential recession because gold is seen as a safe haven and oil prices are going down due to reduced demand for oil. So right now they're trying to pay attention to this and they're saying, okay, well, based on this, that is a likely indicator that a recession is coming. Next, they go to the U.S. non-farm work weeks. And so you can think of this like the hirers or the companies are actually cutting hours for their employees, and it's declining basically to a level that has been that we saw back in 2020 and 2008, 2009. So as the economy deteriorates, you have less and less weeks, less and less time worked basically for these employees, and this tends to foreshadow a recession. Next, you go to the median prices. Now, median prices for new home sales, this has also hit an incredibly low level, and it's actually lower now than it was back in 2008, 2009, okay, which is pretty crazy when you think about that because it was the great financial crisis and the collapse of home prices. Now, this, in their view, is bearish because there's not as much demand for new housing, and so as a result, the prices have to come down again, just kind of like with oil. But in their view, this is bearish. This is a precursor to a recession, and they've noticed that this could potentially affect the price of Bitcoin because during a recession, people don't have money to buy Bitcoin, or they may have to sell their Bitcoin in order to pay their bills. All right. And then the final thing they talk about here is the Fed funds futures. Now, they basically kind of like the dot plot where they're trying to predict what the Fed funds rate is going to be. Now, we know that the Fed recently said that they're going to expect three rate cuts in the next year. And this previous, what we have here, this slide is basically showing us from a month ago that this exact same thing is going to happen. So this is a prediction that was borne out, And now we're starting to see knowledge that the Fed's actually going to be cutting rates, which is going to be good for Bitcoin. If you guys are curious about why that's good for Bitcoin, I've made several videos talking about that, including my most recent one where I talked about the how this is going to spur a new Bitcoin bull market. Definitely recommend you guys check that out. And that's it for this month's Bitcoin monthly report. We're going to go back to the summary, and I'm going to give you my thoughts as well as a quick wrap up. So, Bitcoin has moved above those key levels, the 200-week moving average, and it's on-chain mean as well. That's really important for your support levels. There is global demand for Bitcoin coming from both the Eastern and the Western markets, and the holder basis remains incredibly strong. Okay, so you're having in the case of 1-year holders, 70% of holders have held for at least 1 year. Okay, that's really important. But again, you start to see that ARK Invest gets incredibly bearish on the economy in the future. They're pointing towards all these leading economic indicators that are saying that a recession is coming, a recession is on the horizon, and they're saying that that could potentially wind up impacting the Bitcoin price. So overall, this is a pretty bullish report apart from the macro economy. And what I have to say about that is that if you believe that Bitcoin is a digital gold, then during a recession, Bitcoin should actually rise, or at the very least, it shouldn't fall dramatically. Because if you think Bitcoin is a digital gold, gold's been a safe haven. Thus, Bitcoin should also be a safe haven during times of uncertainty and times of recession. But let me know what you guys think below. Leave a comment, and I'll catch you guys in the next video.